Hey, what's up? Welcome to DGen That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Tilray Brands, ticker symbol TLRY. And so here I am recording this on Monday, October 21st, after the market has closed, and Tilray closed at a price of $1.58, being down about a 0.5% on the day. And as you can see in the chart, it has been residing right around this level, being below about $1.60, hitting a high today of $1.60, getting rejected. We see this consolidation that we are forming, and I unfortunately think that the stock price could be going lower. And so I wanted to go over a pattern that looks really compelling to me. I do think that we could be seeing, a pullback over the course of the next month, but then by that time, I do think that would be a great dip buying opportunity for what we might be seeing in December, Santa Claus rally into the end of the year, stuff like that. And so, the pattern that I am thinking we're forming is this falling wedge. And so the base of the wedge is based on these two pivot points that you can see here, one being the low from June 25th at a price of $1.61. And that does seem to correspond with the low that we saw over here from September 6th of $1.62 that I do have marked here in red. So I do think that is a notable level, as we did bounce from there here. So I do think that is an important pivot point over there. And then the other pivot point is the low from earnings day on October 10th. We hit a low during market hours of $1.45. And so those are the two pivot points. And we can see that the wick low that we saw on August 12th did intersect with that line, coming down to a low of $1.50, although my understanding is no orders were filled at these low prices, but it is on the chart there, and that does suggest, that this trend line is significant, that we did bounce from there. And so, or at least I view it as significant. Maybe, take it with a grain of salt. And then the top of the channel here is based on these two pivot points, one being the high from July 30th and the other pivot point being the high from September 17th. And you can see from that downtrend, we did get a wick above it, almost a wick to it, but not quite. And, we have been residing below that level. We have also been residing below $1.70. I was hoping that we were seeing a fake out break below that level before earnings, and that we might be seeing a bounce getting up to fill this gap here right around $2 a share, but we did not see that. We saw this pretty big move down, and then we have seen this consolidation. And so with that being said, I am really just compelled by like the structure of this. I feel like a lot of people really want this to be going higher, but it just seems like it has been really weak with these two downtrending levels, one being support, the other being resistance, trading below $1.70, which, I have found that to be a very nice dip buying level from the past. We see any of this price action coming below $1.70. Price did rally very high following that. So, if buying the lows over here, that's up more than 100%. Going just from the level of about $1.70. That's, right around 100% to the upside. So, I think that there were a lot of good dip buying levels at that level of $1.70, but now we are below it. We are finding that as resistance. And so, part of the reason why I could see price coming down to test the bottom of this channel is that, basically with the monthly contracts for options, those expire in, a month in November on the 15th. And so I could see price kind of fading down until we get to that date. That would be right around here, November 15th, where the cursor is. And that would be putting price right around $1.42 or, $1.420. And so for me personally, I do have an alert at $1.42, or as you can see there, $1.420. And I also do have a small buy order. I'll reassess if and when that does get filled, because I think that could be a really great dip buying opportunity before we move to the upside to test the top of this wedge before breaking out, moving up to fill that gap at right around $2 a share. And so yeah, if we do pull back to $1.42, I think that there's just a lot of great upside potential. Even if it's just going to the top of the wedge, we can see that from $1.42 getting up to the top there, that's about a 10% move. Getting back to 170, that's about 20%, and then getting up to $2 a share, that's about a 40% move to the upside. And if I do take a step back, we do have some other gaps to the upside, one at 247 or right around 250, and this other one here at 259. So if we were to go from right around $1.42 up to fill these gaps, that's getting up to around 70%, or maybe we take profits a little early, right around 69%. You got to have fun with the numbers. And so with that being said, I just think that, while I wish that it was breaking out, I wish that price was going higher. I just think that this is a really nice timeline over the course of the next month to be pulling back, testing us with $1.42, having fun with that number, and then that being, the real discount dip buying opportunity for the year, as $1.45 was the low so far. Maybe we get a little bit lower than it, maybe down to 140, but orders only getting filled at $1.420 before, taking off, going sky high to fill these gaps here. And then there's also a lot of potential, if we do look back on the chart's history, to go well above these gaps. But I think, just looking at the more near-term time frame, I could see this pulling back to $1.42 because we have been showing a lot of weakness, in all honesty, hanging out below not just $1.70, but below $1.60. And so a pullback to around $1.42, that would represent a downside move of right around 10%. So, I think it's going to be good to be patient, to wait for that dip, and then, to strike when we do get down there, because I think that there's just so much more upside potential, because, like I said, going from $1.42 up to $2, that's about a 40% move from current price. That's only about 25% move to the upside, and then you do have to endure that 10% downside move. So, I think it's better to be patient, to wait, because I think that overall the stock just seems to be, unfortunately, fairly weak, unless we do start to see some big candles supported by volume. But we really have just seen, volume kind of fading down, and the MACD here being negative still, not with much momentum behind it to really turn that around to get that positive with some moves to the upside. And the RSI has been hanging out down here right around 38.49 for today. And so, yeah, I think that it just looks weak. I think that this needs to dip down to below 30 in the RSI. That is getting into the oversold territory. As we can see, the lowest values that we saw here were, on the 10th when they did report earnings. We saw the RSI hit a low of 35.10. So I would look for the RSI to go below or right around 30, maybe 30 point something, or 29 point something, before really starting to think that there might be a bottom. I just don't think that we're there yet, and I think that we need to see that pullback. So $1.42, have fun with the numbers. Otherwise, this is just boring and painful. $1.42, $1.420. Have fun with it. Hopefully this video is helpful for you guys. I'm looking forward to that dip. As you know, from the video series that I did going over the unusual whales, I did get out of all of my calls, unfortunately at a loss. I did sell my shares at a very small loss, but I'm looking forward to reaccumulating back at $1.42, and I hope you are too. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.